everyone, welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is going to be an extremely special conversation that all our viewers are going to be cherishing. A globally renowned company, CCL Products, is going to be with us on the program to detail for us what is it that they're looking forward to and excited about going forward from here. The company, which has a strong presence in both B2C as well as B2B coffee segments, CCL Products is also seen as the third largest coffee brand in India. In fact, it exports to over 90 countries in the world, as well as has a diverse portfolio that includes instant coffee, roast and ground, premixes, and now new, iced tea range as well, under many popular brands that it holds: Continental Extra, Percol, even Greenbird, and many, many more. Over 1,000 blends is what it celebrates, and it's definitely geared up to really tap onto what is being seen as a consumption wave that is kick-started and is continuing far and wide within the country as well. To discuss with us the company's vision and growth trajectory going forward, Mr. Srishant Challa, the Managing Director of CCL Products, is now joining in on the program with us. Warm welcome to you, sir, and thank you so much for taking the time out for this special conversation. Let's start off by understanding what is the current trend like, with India's coffee consumption that seems to be evolving rapidly, not just in the metros, but even beyond that as well. Could you detail for us and our viewers to understand a little bit more as to what are the newer trends that you are really witnessing of late? How are you looking at the growth path or the outlook for the industry at large? And what are the opportunities that present themselves for players like you?
Okay, so a lot of questions. Let me see if I can cover all of them. So yes, we are seeing a lot of growth within India and in Asia as well. The developed countries, the growth rate has actually come down significantly, but we are seeing a double-digit growth rate in developing countries. Our volume base is also quite small, so that's also one of the reasons why we are seeing this trend change. Coffee consumption as such has started increasing with the younger population getting used to coffee shops, spending more time. And when they want to have a cup of coffee at home, the natural choice becomes instant coffee for them, or a bean to cup machine for them. So, what are the new trends? We have a lot of new products, new categories that are increasing as well. Things like cold brews, specialty coffees. These are the products that the younger generation is actually preferring. They want better quality products. They are willing to pay the price for it. And this is the category that we are seeing grow much faster than the traditional vanilla type coffee that people are used to in the past.
Absolutely, Mr. Chala, you observed correctly that when it comes to experiencing a wider variety of coffees and not just a plain vanilla old coffee is something that is a major trend, and that definitely augurs very well for players like you. Now, you've also rolled out a UK origin brand, Percol, in India about a month back. Tell us, what are you aiming to with this launch of yours into the country? Do you think there is emerging demand for even premium, sustainably sourced coffee in India as well? Do you think this also marks a strategic shift for you towards building a high margin branded portfolio?
Well, yes, actually, that's the main reason why we acquired this brand in 2023 as well. This brand was always standing for sustainability, good quality coffee, ethically sourced, fair trade, rainforest certified. And interestingly, this brand was actually co-created by us in 1997. When the founder subsequently sold the company in 2016, so the sales started coming down. It was dying a natural death. That's when we felt that it was an opportune moment for us to acquire the brand. And once we did that, we felt it's a good opportunity for us to launch this in India as well, because we are seeing a lot of people, especially people who want to drink black coffee. People are understanding the health benefits that coffee has. They don't want a bitter coffee that is difficult to palate. So, keeping all these problem statements in mind, we thought Percol would be the best fit for a person who's willing to upgrade their consumption model and start consuming black coffee. So with that around, we launched it in India.
So, sir, could you help us understand what do you think will be the resultant impact on margins? Can your margins improve because of this premiumization trend and your, focus on the premium coffees as well?
Yes, so the margins will be definitely better for a product like this, but right now it's still a very small product, and we have to spend a lot more in creating awareness, advertising, and all that. So it'll take a couple of years for the for this particular brand to even break even within India. But in the long run, yes, we feel that it has a very good potential, especially considering that more and more people are demanding a product like this. They're willing to experiment with new qualities and varieties.
Absolutely. Mr. Challa, we understand that you operate in both B2B as well as B2C segments as well. Could you give us an understanding of when it comes to the overall revenue you derive from these two segments? Where do you have the maximum revenue input from, and what do you think is going to be driving your growth, going forward from here?
So our company is primarily a B2B company. So we have always focused on creating brands for our customers. This endeavor to get into the B2C segment is an endeavor which started about 7 years ago. And what we started with in a very small scale. And even till date, it's less than 10% of our overall turnover that is coming from the B2C component. And going forward, what we have done, especially in India, we wanted to experiment in a different way. When we created our entire domestic team, we actually gave them a mandate to grow the pie, to increase the consumption of coffee in India. So today, most of the private label in the country, more than 90-95% of the private label in the country is being catered to by us. So we are focusing on the B2B as well as the B2C segment within India.
Now, you did start off by talking about how you are looking to enhance and focus more on expanding your portfolio. Could you tell us a little bit on your product mix right now? And how is the portfolio lineup going to be? What is the pipeline in FY26? What are you looking to add?
Yeah, so at this point in time, we are doing basically anything and everything pertaining to coffee.
Okay.
So, right from your traditional vanilla type products to flavored coffees to micro ground coffees, specialty coffees, certified coffees. And more recently, for the first time in the world, we actually introduced a new range of specialty instant coffees.
Okay.
This we had to create the technology from scratch at our end, and it's a new offering that we launched with our customers less than a month ago. And the response for this also has been fantastic. A lot of companies are now realizing that they can go above and beyond this segment of instant coffee that they were previously in. So it's opening a lot of new doors for us as well.
Okay, and could you tell me a little bit on how are you pricing this new segment of yours, sir, vis-a-vis the competitors?
So this product range that I'm referring to is actually it's much more expensive than the standard instant coffees, but this is more comparable to the roasted ground coffees that you get in coffee shops. And the product, what we have, is going to be much more economical than what you get in a coffee shop. So technically, a coffee shop is also a potential customer for us. Somebody who doesn't want to invest, say, 5 to 10 lakhs in equipment alone per shop, they can buy these products and give the same experience to customers. So that is what we've seen happen in countries like China, where brands like Luckin Coffee, they have 20, 30, 40,000 outlets that they've opened up, and they're constantly expanding on a very fast pace,
Yes.
and they really don't care about getting people into the store and making them sit and consume. They want people to grab and go. So that concept has really picked up, especially in Asia, and we're trying to see if that same pattern can be created within India as well.
Okay. Could you also help me understand what are your aspirations even beyond coffee? Are you looking at, other lineup of beverages as well? Would you also be looking at expanding, say, with one of your brands, you're looking to probably tinker into the other FMCG segments as well? Do you have a visibility of a full range FMCG company that you would aspire to be at some stage, sir?
Actually, yes. So our vision for the organization was to transition first from a B2B to a B2C company and from B2C to FMCG. We are right now just laying the foundation stones for FMCG. We've already introduced some instant teas in our portfolio, some snacks that were launched recently, and there are several other products that we are currently experimenting with. Wherever we felt that we could use our existing distribution network to expand our portfolio, related products, products that complement each other, these are the products that we're initially focusing on.
So help us understand about your capacity utilization. You have about four factories. Tell us about them and what is the capacity utilization rate? What is it that you would want to probably lead this to? What are your expansion plans?
So we've just doubled our capacities last year. So right now we do have sufficient capacity in place to cater to our requirements for at least for the next 4 years.
Okay.
And our intention also is to gradually ramp up our volumes accordingly. So we're looking at a 15-20% volume growth year on year. So we very strongly believe in sustainable growth. So that is one of the primary focuses for us as an organization.
Okay, so as we understand so far, maximum part of your revenue also comes from exports. What is the domestic vis-a-vis export, contribution that you have? How are you really looking to explore both? Are you looking to expand beyond the current set of the countries that you're looking at? You're already at 90 countries right now, sir. Or are you looking to expand with the product range that you have domestically also? Are you looking to raise that percentage to a little higher number now?
Yeah, so today we are actually a number three brand in the country, and our volume base is still quite small. So we feel that there is still a very good potential for growth within India, and we are actually focusing on creating new products, a new product range that is not just the standard Me Too products that are there. So India itself, we feel there is an option of expanding the pie. We are still only 10% of whatever we do is within India, rest is being exported. Even in the export market, we are seeing substantial amount of growth because of our economies of scale, technological capabilities, and all the other plus points that we have. We're able to grow consistently year on year. The world has more than 50% excess capacity. So capacity has never been a problem in our line of business. It's giving the right product to the customers at the right price point, which is the challenging part. And that is what, with this 30 years of experience, we've been able to crack effectively. And that's one of the reasons why we're able to grow both the domestic as well as export segment consistently.
Okay. Mr. Challa, help us understand, since you have doubled your capacity, what is the kind of investment that's gone in and where has it taken your debt to equity currently? Would you also need to fund, some of your existing debt from, outside as well?
So we've done a lot of internal accruals. Our long-term debt right now stands at about 700 to 750 crores. We will become debt-free in the next 3.5 years.
Okay.
And the rest is only working capital debt. So both long-term as well as working capital combined together will be in the range of about 1,500 crores.
Okay. What is the trend that you're spotting on the coffee prices right now, sir? And how are your raw material prices really, inching? Where are they inching right now?
Yeah, so coffee prices have been quite volatile. They've been fluctuating a lot. A couple of years ago, we were seeing prices in the range of $1,300 a ton. That has gone up to even $6,000 a ton. Now it's kind of stabilizing at around 3,500 to $4,000. So we are seeing softening of coffee prices also mainly because of what's happening in Brazil, the kind of capacity enhancement that Brazil has done. They're growing a lot more coffee. So that is also directly translating into this demand supply mismatch getting bridged faster. So hopefully by next year, we'll start seeing a further correction in coffee prices as well.
Okay. So if you could detail for us a little bit about your branded business, what is the outlook on that front, sir?
So our branded business is actually doing quite well. We were at around 300 crores in just the pure brand, and we are looking at almost 40% growth this year, and we feel that it's quite sustainable. And yeah, we are also launching our products in different regions as well. So we've expanded from just 4 states to now a complete pan-India basis. So yeah, so the distribution network is getting built quite well as well.
Fair point. Help us now understand, just give us from a long-term lens, what do we expect when we talk about next 3 to 5 years and then next 5 to 10 years? How is the company really going to be looking at various milestones that you would want to achieve for yourself?
So I guess the first milestone that we are looking at is transitioning again from the B2B to B2C. So we are looking at the B2C segment contributing at least between 30 to 50% of our overall revenue. We are hoping that that should come online. So that is first one. The second part is as we are transitioning from a B2C to an FMCG company, we're planning on introducing a lot more products as well, and we're hoping that that contribution also will start coming in. We are increasing our capabilities internally as well to gear up for these other products as well.
Okay, so you did talk about within the FMCG aspect, you're looking at launching some snacks, you already pointed out, and probably cold brews is what you're looking at, teas is what you're looking at. What could be the next categories that we look at you entering in, probably in the course of FY26 maybe?
So a bit too early to tell at this point in time. So whatever the products that we are clear about that we've launched is what I can speak about. Rest things are there in the pipeline. I think when we are ready to take it forward, that would be a more appropriate time for me to talk about it.
Okay, sir. Then give us, a color on what do we expect. You did say that the branded business could look at a 40% growth this year. Or your overall top line and bottom line, what is the kind of growth expectations that you have?
So our guidance has been typically around 15 to 20% year on year. Our nature of business also, what we've always mentioned is it's not a quarterly business. It is more on an annualized basis that one has to look at our business. And that guidance is still the same. We have a fair amount of visibility. We know what are the markets that we're going to go to. The building blocks are in place. So there are not too many surprises one will get in our type of business because coffee is a product that has withstood what COVID, wars,
Yes,
recession, you name it. So one of the
absolutely.
that's yeah stood the test of time.
Absolutely, Mr. Challa. Thank you so much for being with us on the program, and all the very best to you for the journey that you've outlined for our viewers to understand as to how a lot of things may be on the anvil for the company, and how we will probably start to look at it very, very differently from current basket of this, kind of products that we deal with at this point in time as well. But all the very best, and thank you so much for speaking to us on Business Today Television.
Thank you.
Thank you so much. All right, viewers, there you have it. CCL Products, interesting vision there. The company is moving from B2B to B2C, and then looking at a larger FMCG outlook that the company already has. The company is exploring into more products, more category launches as well. They're already exploring into teas beyond coffee, into snacks in the FMCG aspect as well. Of course, things are lined up, but The company is also focused on increasing and seeing an improvement on its volume growth. 15 to 20% kind of a growth is what he's highlighted. What we're also given to understand is that the branded business could actually be seeing a 40% growth from here as well. India business also could see an improvement going forward from here. So there are a lot of touch points that the company is looking at that could mean that the company's business is on the growth path, as well as the margins are also likely to improve with an improved focus on the premium content and the products that the company is focusing on. We'll leave you at that, but stay tuned on to Business Today Television. We continue to get you all such deep insights from the top managements of the companies that are getting listed, so that you exactly know what are the companies out there and whether they suit your own investment portfolio as well. Thank you so much for watching this one. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, that's Daily Call.